Hey everybody, good afternoon. Welcome to 12-Minute Trading. My name is Doc Severson. I am joined today by Dave Lukas. Today is Monday, the 20th of October, and it has turned into Uptober once again. So after our little tariff tantrum part two that we had about a week and a half ago, it seems that we've almost erased all of that downside. So it's not
Yep.
quite there, but damn is it close in it, and it just seems like every dip that we're seeing is being bought. So Dave, I am confused. I don't know where the market's going next, but you'd have to say the odds favor the upside.
We've been saying that each week. I think into the end of the quarter, I think in the end of the year, this thing's going to rip higher. And now we've got a fully charged daily chart to kick that off, plus a weekly chart that's got plenty of energy to go through the end of the year. So for me, I haven't changed my tune. You got a little bit of a pullback, and when you have a complacent market, and I think you made the analogy of like throwing a rock into a pond and the ripples. You'll get that for a little bit, and then it dies back down, right? And that's what we got with a little bit of the tariff stuff. But they've already backed away off that, and now they're looking at reducing tariffs on like essential things and stuff. So, to me, you got a Fed that's lowering rates and stopping QT, which means QE's right around the corner. So you got that accommodative, kind of Fed out there. You've got a market that is in a clear uptrend that, has a lot of momentum in it. It's got the energy to do it. You're in, the fourth quarter, which is traditionally one of the best quarters of each year. And then you also have really a government that's very accommodative to, the business side of things,
Yeah,
right?
especially when it's shut
So
down, right?
yeah, I mean, so yeah, like market loves gridlock, right? Nothing,
Yeah.
nothing happens. So, like all the things are there just to keep this thing rocking higher. Eventually, it will end, and the more parabolic it goes higher, the worse the ending will be. But that's just not here yet. And we've talked about that in some of our last videos about when the market gets noisy and stuff like that. But this isn't noisy. This is just a short little pullback that is charged itself back up exactly what it needed to do to continue to run higher. And now I think we're getting ready for, that next leg up.
I would have to agree. Let's
Yeah.
I'm going to bring up the charts here, and so we can take a look. And that should do it. Okay, so what Dave was talking about is the energy. And the thing here, let me get my my magic pen in place. The thing here that we look at all the time is that markets which walk sideways, it is a way for this is basically nonlinear price action. So if you look at this for the past, and this is going back to mid-September. So for the past month, we've gone nowhere whatsoever, absolutely nowhere. And this actually also goes in line with this exhaustion figure that we had down here, which was
Mhm.
reaching critical areas. So this is normally where we get some volatility. We got just enough volatility to allow this thing to give it a little bit of breathing room. And so what Dave is saying is that the weekly chart looks good. There's a lot of potential for this to run in either direction. And when we get conditions like this where we see a lot of potential movement from this, we have to go with what is rule number one. The rule number one says that larger time frames dominate the trend. If we were going to get a reversal, we would have gotten one right there. We would have seen this set up the lower high. We would have gotten a reversal into this, maybe down 5-10%. I was all in favor of that. That would have reset us for months to come. We may have to pay for this if it actually does break out. We may get a couple of months. And then as we get into the end of the year, I think we're going to be unstable once again. I think we're going to, as
Mhm.
long as the market continues to run right on the edge of exhaustion like this, we're going to be running from one unstable event to another. But hard to complain with what we're seeing here today.
Yeah, I mean, it's just poised to do that, and it's got to get everybody on board before it falls apart. So that's just the last leg here. There's still upwards of 7 trillion in money market accounts. You got to see that come off the sidelines. That's needs to get put in, drive this thing higher, and really get just everybody on the wrong side before it has that. And interesting enough, like even last week, like you see this across the board. Look at gold today. Like last week, gold had a pullback on Friday, and it was like, okay, this is it. Gold finally is going to do the pullback. Today, it's up like I mean, I think the GLD was up 10, $11 last I looked at it, today. It was down 7 on Friday. So it's at 400-ish now. That's still the same, type of trend heading higher. This thing's gone parabolic. Look at it on the weekly chart and everything else, but look at how the daily chart just keeps charging itself back up and like stair stepping higher. It really is pretty amazing. So this is another sign of just like it's things aren't ready to give up the ghost yet.
I've
That's
never,
just where we're at.
I've actually never seen a weekly chart with an energy of 11 before.
Yeah, I know it's been. I can't remember the last time I did either. Teens, yes, but to get to 11, geez, it's just that is extremely exhausted. But this is not a normal time, I think, for gold. If you go back, and this is back in history, but if you go back in the 70s and look what happened to gold in 71 when we came off the gold standard, over the next year or so, gold shot up. It went up. Remember, it was $35 to 1 ounce of gold was the peg. Well, gold shot up to $180 an ounce. So you can do the math on that. That's like almost a 6x on the gold price. And then gold did fall. It fell back to like 100, and then it went for the rest of the 70s on this massive run to like 800. So like that's what I'm looking for is like at some point, because this is all being driven by central bank buying. Central banks have 10 plus trillion dollars of like US debt, bonds, that sort of stuff. And they've taken maybe 400 billion of it and put it into gold. That's what you're seeing here. And then you're seeing retail follow along with that. Heck, if they do 20%, that's $2 trillion dollars in gold. That puts gold easily at 10,000. So, to say this is ending, it's not going to end until the central banks say, okay, we've got enough, we're good, right? That's when it ends. And then you probably get a nasty correction there. But then I bet you it turns around and does something like what it did in the 70s and goes up to, wherever. And so that's something to think about with gold. That's just how it's performed in the past during times like this.
If I were to look at this and say, well, what's going to happen next? At some point, we're gonna top out, and then we'll probably see something happen similar to this, where we set up a corrective move, and it's going to do one of these things again. So notice
Hmm.
notice the if you understand your chart patterns, cup with handle, and in fact,
Yep.
even if you look at this, this is kind of crazy.
It's all cup with handle patterns for like the last 45
This
years.
is an inverted head and shoulders pattern. So even the handle was a bullish chart pattern.
Yep.
So that on top of the cup with handle, bullish chart pattern, and this was my upside target based on the measured move from this, and
Hmm.
it's more than exceeded that.
Yep.
So I think I took off half of my position about right there, and a little bit of regret, but I've been through these things so many times where you get up on something and then a month later or a couple of months later you're like, oh man, I should have pulled the trigger. But so this is one of the changes I'm making in this bull is that I'm splitting my positions up into either halves or thirds, and I'm scaling out as this goes up. So ideally, as this thing hits its apogee up here, or you could say this with any asset, is that I'm distributing partially into this, and then I'll have some type of trailing stop under here, which get hit for the remainder. So I will always surrender some of the gains for this. I just want to get the meat in the middle. That's all
Yeah,
I'm
if you
looking
notice
for.
this thing, its tendency is to kind of flag out. It's they create that handle on the next cup. It's a pretty steep cup, but the next handle, like that would be like maybe 370 on the GLD, like cut back to there and then just go sideways for a while and then start rocking and rolling again. So definitely, again, it's really hard to predict something like gold just because, if the central banks keep buying it, it's going to keep going up regardless of what the energy says.
Could we see any of your Mag Sevens or your Palantirs or anybody like that doing the same thing?
I think we could see that with this market overall before this one ends, you know? So, I mean, you're seeing it already with some of these. Yeah, there's Palantir. There's a good example. There's NVDA. I mean, you're looking at all these. Ironically, one that I think is undervalued right now is Amazon, from where it stands at 215. It's right there. Actually, Amazon being around 215 is not too far off the 200-day moving average there. But, all these, and again, I've said this before, what you're looking at, yeah, I mean, these companies are doing pretty well and everything, and there's that AI exuberance and stuff, and everything. But uh, again, a lot of what you're seeing is this is the loss of purchasing power and value in the dollar. So you're seeing in gold, it's what you're seeing in markets. Remember, assets inflate as the dollar loses value. It's down 10% alone this year. So that's a lot of what you're seeing pricing into the markets. And you have a very accommodative, environment. And again, a lot of liquidity coming in. If a Fed's going to switch to QE, which is around the corner probably, it just fuels it even more.
Well, and they're
So,
they're talking about replacing Powell next year with obviously they're gonna
Dove.
yeah, with a plant. They're
Mhm.
gonna just insert him into the equation, and it's he's gonna be like print. I must print and cut. So
Yep.
you know where it's going because that's
Well, right
that's
now
the
they've
only
got,
that's the only way
yeah,
out of this mess.
well, they've got a 25 basis cut next week. They've got another one penciled for December, another one penciled for January already. By then, you're going to be getting into who the next Fed chair is, and they're going to be dovish. So then it's maybe 50 basis point cuts. So I think we're going, I'm not going back to zero probably, but I bet you we're going down to like, 1 to 2 maybe, by the time it's done. That's just, again,
we
very
started
accommodative for
we
markets.
started seeing the some of the 10-year note is starting to. Oh, I got the wrong ticker here.
Below 4, right?
Yeah, let's see. It's always there. We go. CGI. So yeah, we're now below. We're right at the cusp of 4. So this
Hmm.
has been extraordinarily stable for a number of years now. So this is going back to end of 22. It's been very stable, right around four and a quarter, 4.5 or so. But watch this carefully because if this starts to drive to the downside, you've got to be long assets. If you're not already long assets right now, you're going to have to be. You'll have no choice by this point. We're going to be in the condition where you've got to just hold your nose and jump in.
Yeah, in fact, if you're opportunistic, I mean, flipping to buying bonds now is the better trade. Bond prices go down, or sorry, bond
Interest
rates
rates
go
go
down,
down. Yeah,
prices go up. Yeah. So you can see it kind of finding a bottom there.
interesting. Yeah, I wonder. I wonder if there's any way. Now, when I looked at these before, the TLT selling puts on the TLT, it never made any sense. And it's still look at the implied volatility on these. It's extraordinarily low. So
Mhm.
it's more of a this is a condition where selling puts really doesn't really get you anything at all. I mean, you can if you want to, but it's more of a buy right territory.
Yeah,
Because
just buy the call
yeah,
and
because
hold
I
on
think that
if you think it's going to go up.
the skew is to the upside here. You can
Yeah.
see that the skew is the options are more heavily leaning towards the call side at this point. So I think Dave's right. I think this thing is on its way higher, the TLT. Hey guys, any
Yeah.
questions while we're still here for another few minutes? Let us know if there's anything you want to look at. Any questions that you want to submit to us while we're here live online, or for those of you that are watching this on a replay, which is going to be most of you, let us know if there's something that we can answer for you for next week's session. So we do this every Monday afternoon.
Mhm.
So we'd be happy
Let's
to
uh
make this
let's let's run
interactive.
through the crypto trades form real quick. Let's look at the IBIT and the ETHA as well as the coins themselves. Just nice turnaround today. I think this could be a bottom for them too. So good time to if you haven't if you're looking for some exposure, could be a good place to get in at.
Here's what I think's happening on. Notice what's happening on Bitcoin. You're starting to see the realized volatility expand. We're getting a broadening pattern, and broadening patterns lead to they you once again you can either look to the upside or you can look to the downside. But I don't imagine we're going to have downside without some upside first. So this typically markets tend to crash from euphoric highs, and we're not quite there yet. There's still a lot of, I would say, disbelief and skepticism in this out there. So I think we still have some upside left for BTC. Now, surprisingly, Ethereum is down a little bit today, but overall, this is a nice corrective pattern that I think is in good shape. And we've been selling puts against this one. We just did some, let's see, I'm going to go over here on the funds. So we've been trading ETHA. So this one is much, much better than EETH. That is another futures-based ETF, but the options are horrible. But ETHA is very good for Ethereum, and it's inexpensive. I mean, for if you're selling, say, like $27 puts, it's only $2,700 margin for 100 shares. So that's reasonable. And even IBET is still reasonable. It's still only $60 a share right now. So we're selling down in the 50s. Down, we set up a new series for the end of November right now at, I think it was 56 this morning, which is just outside of support, below the $200-day moving average. So these are good. Now, there has been a nasty corrective move, but again, you would expect to see the reaction to this be kind of a mirrored reflection to what led it there. So if you have a sharp move down, you're going to typically have a sharp move up. Kind of the same way that we had this move here. Sharp move down, sharp move up. Okay? Sharp move up, sharp move down. So markets tend to mirror each other. So looking for something here. Now, to me, the play here is going to be at some point in the month of October, maybe early November, we're going to have another pullback, and this is where people are going to lose it. They're going to go, "Oh no, here we go again. We're heading lower. I can't do this anymore," and this is where things are going to take off. I think, and Bitcoin is pretty much aligned with the rest of the market, with the rest of the risk assets now. It used to run almost completely opposite to it, no longer. So it's been institutionalized over the past year with the addition of options and the ETFs. So
Yeah, actually, if I want to know what markets are going to look like futures-wise ahead of time, I'll look at where Bitcoin's at, like on a Sunday morning or something at this point, because it definitely seems to be aligned with the overall trend.
yeah, and you know that at some point we're going to have 24/7 markets. It's only a
Yeah.
matter of time. It will happen. Today's generation is used to being online all the time, and
Yeah.
it's really only the older generations are used to having a weekend, right? So,
Right.
today's lifestyle is pretty much I'll do what I want to when I want to do it, where I want to do it at,
Mhm.
and so that lines up with the 24/7 by 365 style of trading. So,
And that's gonna
crypto's
come.
been
That's
doing
gonna.
it
I
for
mean,
years.
yeah, that's gonna come along. Probably like a Robinhood or something, be the first to really push that. Um, you know, Coinbase allows trading, but they don't allow you to do. Obviously, you can buy and sell, but you can't do it really any options activity, right? That's the key, I think. Once that, it's the blessing and the curse of it all, right?
Well, what's
So,
also going to be important is when we have true crypto options that are
yeah,
accessible through the US
right.
markets. There are actually spot crypto options that are available
Yep.
through companies like Deribit, but
Hmm.
the previous administration made it highly illegal to for US citizens to access those services. And they
Yep.
would come after you. In fact, they tried to put a few of these businesses, you know, few of these companies out of business. So I don't think that's necessarily the deal now. The enforcement's a little softer, but still, I think the stance is there that they don't want U.S. citizens accessing an exchange in Malta. I things like that.
Yeah. But it'll eventually come here and it'll be on your normal exchanges
It
and all that
will.
stuff.
It
And
will.
that's,
It's
yeah,
if there is the demand, then market makers will find a way to
yeah,
create a market for it and to get commissions for that. That's their job. That's
exactly.
what they do. So
Yep. I think, again, back to the how we started today, I think we're probably at the beginning of kind of that run into the end of the year. I think one thing for you that we watch, guys, Doc, if you can pull up just the daily chart again itself with the energies, the daily chart energy is extremely charged up, and these moves go like, they can all happen in like a day or two, or it can go on for like 6, 8 days, trading days or so. And so we're at I think we're about the third or close to the third highest charged up that we've been this year with this thing. So that energy on the daily chart is just getting ready to explode out. And it, today you could say, oh, it's the beginning today. Usually you want to see that line turn downward and see it continue, right? We haven't gotten back to the all-time highs yet. So that's what we're watching. Once that line really dips down and we keep going higher from here, then that's a good confirmation. And that means that this will kickstart the weekly chart energy upside and everything from there and give us that run through the end of the year.
I
I
mean,
think that's the key thing.
right now we have this Darvis box, which is based on the size of
Mhm.
the previous Friday's candle from the 10th.
Right.
But I think it's just about a foregone conclusion that we're going to break through there. I mean, this could easily hit 7,000 before this daily chart is out of energy.
Oh,
Easily hit
and
7,000.
if this move breaks upward, you're easy at 7,000 before the end of the year. You're above 7,000, I'd say. With having about 50 on the weekly chart, that thing can go up 400 or 500 points from here.
Yeah, look how fast. I mean, when we had this last energy burst here, this thing went from 6,000 to 6,200 in just about a week. And so that's about as much as we're talking about. By sometime early in November, we could hit that quite
Yep.
easily. So
Yeah, you throw a good piece of news on the fire, the Fed, I don't know if you noticed this, everybody, but the government's closed and they can't get any information out except CPI and inflation data is coming out this week.
no, they just schedule it. They just schedule it, but it's they can schedule it, but there's if the government's not open, it's not going to happen because they did the same thing with PPI last week. They scheduled it
Okay.
with the expectation that maybe they'll stop
Okay,
shutting
because yeah,
down.
I saw that they were going to put it out there, and I'm like, okay, so either they're just picking and choosing, like that's really good, and it's going to make the Fed even lower rates even more, or something like that. Because I saw that, and I'm like, everything else is closed, but that's going to come
No,
out.
now the other numbers that are coming out are like Fed numbers, so like regional
Yeah,
Fed numbers, like Atlanta,
right.
Fed inflation expectations, or if we have like the Philly Fed numbers or the New York Empire State Manufacturing Index, those will still come out. And then, private institutions like you have the University of Michigan consumer sentiment or consumer confidence will come out. But these big numbers, it's all about earnings now because now we're
Yep,
into tech season and earnings
yep,
with the Fed. So for the next 2 weeks, that's going to be dominating for
yep.
this.
And I think earnings are going to be great. I don't think there's going to be any issue with these guys hitting their earnings.
Oh,
So.
thanks for advising to hold off on GLD call spreads.
You guys are you're welcome. I look, that trend is just no point. I mean, I sold GLD put spreads at last Thursday for today and outside right at the expected move, picked up a nice 10% return on risk and was out the first thing this morning on those.
I've been solo and a professional investor for about 20 years now. And spotting the top, I've found is the very hardest thing in any market, especially when you have animal spirits running away. There is no study that you can put on there, whether it's stochastics or Bollinger Bands or Keltner channels or DMI, ADI, those kind of things. It does not matter. you cannot evaluate a market in real time based on previous data like that. So it's
Yep.
one of those things where it's very obvious in reverse in the rearview mirror. Oh, you should have seen that divergence there.
Hmm.
You can stack up all the information that you want and all the evidence that you want, but it's one of those where you've got to find a way to either stay with the trend or stay away from the trend, depending on how you're trading.
Yep.
Bottoms are much easier to spot.
Right.
Bottoms because first of all, tops are a process. Tops do not just die from the top.
Yep.
They
They get
go.
noisy.
It's like a garden hose that you just let go. It just flies around the yard. Whereas bottoms are an event. Bottoms tend to be very spiky. Bottoms are very scary, and Dave and I have learned to listen to that fear. Where 20 years ago we would have been staying up all night checking futures at 2 o'clock in the morning. Now, when we smell that fear, and really that's what it is
Hmm.
it smells like opportunity now. So we get
Good entry
excited
point.
when everybody else is getting scared.
Yeah, I mean, that goes with the old adage too. Fearful when others are greedy, greedy when others are fearful.
Yeah. So
So,
uh, right now, as far as tops, just hold it as long as you can, and find ways to if you're long on something that's ripping to the upside, hold it as long as you can. Chop it up into pieces. Don't be
mhm.
afraid to parcel out, to thin it out as it goes higher,
And
because you
remember, the end is when things go, you get the most gains typically,
right. So
which
you've
is
always got to
crazy
have
to think about.
something at the end. You don't want to just say, "Well, this has got to be it." So you always want to let the market tell you when to get out of something. So nice
Mhm.
little move today. Nice little move
Yeah.
today. Okay, well, guys, looks like we've cleared up everything, and we're at the top of the hour. So we want to thank you guys again for joining us here on Mondays. And once again, if you're watching this on a replay, let us know if you want us to cover something for next week. We'd be happy to do that. So thanks everybody, and
Thanks, guys.
here we come. Here comes
Mm.
earnings season. This is the bit. This is the
Yep.
big thing. All right. Thanks everybody.
See
You
ya.
guys take care.